Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 28th of February. Few prizes for guessing what the central theme has been this week in the markets. It has, of course, been the escalation of tensions and subsequent invasion of Ukraine by Russia. This in turn has pushed the oil price, for example, over $100 per barrel, which in turn is worrying investors in terms of stoking inflation further. Obviously, we're in this inflationary environment. We've got a rising interest rate scenario. So quite apart from the geopolitical tensions, there could be further pressure, not only on consumer pockets, but on companies as well. Despite something of a relief rally towards the end of the week, markets have therefore still taken a 2 or 3% dive over the week on average because of these tensions. So that in the year to date, the Dow Jones is currently down 8.6%, the S&P 500 is down 10%, the Nasdaq is down 13.9%, and even the FTSE 100, which had been keeping its head above water for the entirety of 2022 so far, is now down by 1.2% in the year to date. Turning to next week, there will be some company reports from companies which, for various reasons, have somewhat been struggling over the last year. We've got a trading statement due from Associated British Foods. Clearly, all eyes here on Primark, which is its retail operation and accounts for just over half of its revenue. Shares down around 21% over the last year or so. What we have seen in previous easings of restrictions is that Primark, once let off the leash, really has been getting back to some fairly bumper sales. So those retail revenues are something to look out for, as indeed any further expansion that it might be doing in terms of revenues in the US. In terms of its other units, its grocery unit, which is the second largest unit of AB Foods, has obviously had some inflationary pressures, something else to look out for there. Also got full year numbers from house builder Persimmon, shares down 15% over the last year. This is despite the fact that a number of tailwinds which have been benefiting the sector have pretty much worn off, such as the stamp duty holiday, and again cost inflation is something that's been overhanging the sector. It's also something of a bellwether for the state of the UK economy, so house builders on the whole have been under a little bit of the cosh from selling pressure. But that being said, it's a business which is in pretty good shape. Look out for things like the forward order book, its operating margins, its net cash, and not to mention any further news on a dividend. The yield is an extremely punchy 10% or so at the moment. And finally, ITV also has full year numbers, share price flat over the last year. Two main strands to look out for in this particular business. On the one hand, you've got advertising revenues. Advertising revenues, of course, generally speaking, mirror the health of the economy, so we'll see whether there's been any return to its previous highs. But the other main strand of the business is its studios business, and now that restrictions have largely been lifted, there should certainly be some progress there. Underneath all that, and during the difficulties of the pandemic, keep an eye out for the latest net debt figure. And it will also be interesting to see whether there's been any further progress in its joint venture with the BBC on BritBox, because obviously some of the competition out there, such as Amazon, Disney, and of course Netflix, is providing real stiff competition. Thank you for watching. Have a great week.